Hello, welcome to this second video. In this second video, as promised in the first video, we are to talk about market structure and price delivery. Price moves in patterns. Learn to read them, not to react from them. This is the war room trading, and this is smart liquidity concept. Now, the primary objective of this session is that you as a student, you can accurately read market structure. You can accurately read market structure across multiple time frames and understand how price is delivered in trends, ranges, and transitions. So number one is all about structural literacy. Understand the language of price action. Understand the language of price action. Patience and observation. Learn to see the charts before you can act. Now, let's get to it. Market structure. What you have to understand about market structure is that market structure is the backbone of every trade you will ever take. Without understanding it, you are guessing. With it, you have context, and context gives you probability. So, price moves in three structural states. Number one, we can have price moving in bullish structure or what we call uptrend. Okay? Or what we call uptrend. This is where it is characterized with a series of higher highs, each swing high break above the previous one. I'm going to show you that, and a series of higher lows, where each pullback holds previous higher low. Characterized by higher highs and higher lows, each swing high above the previous high, and each pullback holds above the previous low. And for a bearish or a downward trend, downward, it is characterized by lower lows and lower highs, where each swing low breaks the previous one, and pullback high stays below the previous high. Then another one, the next one is known as the ranging or consolidating market, where price oscillates between defined highs and lows, no consistent directional bias. Breakout potential Breakout potential exists, but not confirmed until structure shifts. Now, let me show you it on the live market. This one is the bullish one. This one is a higher low, higher high, higher low, higher high, higher low, higher high. Okay? We've said that a bullish trend is when we have a series of higher lows and higher highs, where this higher high breaks. It's been broken by the next higher high. This higher low, this one holds. So this one is a strong low holding, meaning that price does not break below it. Now, this one at this point, this is the current swing structure. Okay, where you anticipate this one to continue. So it's just a series of higher highs and higher lows. So this is a chart example of market structure. Okay. Bullish market structure. And as we've said about bullish market structure, we've said it's a series, bullish or uptrend, it's a series of high highs and high lows. Each swing high breaks above the previous one, and high low, each pullback holds above the previous low, as you can see right here. Now let's get to a bearish trend. So for a bearish trend, we have a series of lower lows and lower highs. And as we have said about bearish trend is basically characterized by a series of lower lows and lower highs. I'm pausing to let that one sink in. Now, each swing low each swing low, this one, at this point, it's broken, okay, by this one right here, okay? So, and the previous swing high holds. So price does not break above it, rather it holds. So this one is a strong high. That's why it's known as a lower high, lower low, lower high. So it's a series of higher, lower lows and lower highs, lower lows and lower highs. So this one is the swing high at this point, and this one is the swing low. I hope you're together up to that point. As you can see, for this one, for bullish, this is a swing low and this is a swing high. Okay. For bearish, this is the swing low is the lowest point, swing high is the highest point. Okay. Then now we have a ranging one. Ranging is where now we have a series of it is not going anywhere, it is just breaking above, it is just playing between these 2 points. So this one is a ranging market. Ranging, okay? Ranging or consolidating. Now, let's get to the most interesting part. As you can see, there's these things that I've marked here as BOS, BOS, BOS. What do you think? What is the meaning of BOS? BOS basically means break of structure. Break of structure. A break of structure occurs. Break of structure, BOS, and a change of character. Church. So, break of structure basically occurs when price closes decisively beyond the most recent swing high for a bullish BOS and swing low for a bearish BOS. This confirms the continuation of trend. So break of structure confirms the continuation of a trend. So this one is a break of structure right here. And we've said if price closes decisively beyond the most recent swing high, okay, for a bullish break of structure. For a bullish break of structure, price closes decisively above it, okay? And for a bearish one, price crosses below it decisively with a candle body. I'm going to show you that in the next. So number one, that one, BOS confirms trend continuation, while a change of character confirms trend reversal warning. It's a trend reversal warning. Basically, when price in a downward trend makes a clean break above the most recent lower high, it signals potential reversal for a bearish to bullish structure. This is the earliest signal of trend transition. So let's say we have something like this, then price comes and breaks this high. So remember, right now price was in a bearish, then it breaks this one, so this one becomes a change of character. Okay, the earliest sign of a change of character. Break of structure, we've said price closes decisively beyond the most recent one, and for bearish, it's the same. Change of character in a downwards, we've said that if price was breaking this, then it now changes. So that one is a change of character. Okay. Then confirmation rule, always wait for a candle close, not just wick through the structural level. Wick creates for false signal. Trading application, BOS signifies continue in trend direction, change of character, begin watching for reversal setups, but don't trade yet, wait for a confirmation. Now let me show you it. If you had a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, then price breaks the previous higher low and it has closed decisively. Basically, you have a candle body close. Okay, I'm going to show you what that one means. So this one, now wait for confirmation. Now this one is a trend change, okay, or trend shift. Then we have a series of lower lows and lower highs. So previously price was in an uptrend and now price is in a downtrend. This is basic market structure. Okay. Swing high and swing lows, identifying the correct swing highs and swing lows. Let me show you it on the chart. On the chart, you'll see something like this. This one is the previous high, 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 low. Then continues. Comes here, higher high and higher low. Then it breaks a structure, then continues high highs and higher lows. Then what do we see happens? We see that price shifts. Now this one is the change of character. Now it's now forming a downtrend, okay? And now we can see it's broken decisively with a candle body close. Change of character. Now this one is the now lower low and this one is the lower high. Lower low, lower high, lower low. So how do I identify an higher low and for a bullish for a bullish for a bullish structure, you're going to draw a rectangle from this point, from a previous higher high to where the break of structure happened, and drag it down. Now the lowest point where price broke, where price reached before breaking the structure, this one is the higher low. For a bearish trend, you're going to do the same. Draw a rectangle from the previous lower low to where price broke structure. Drag it. The highest point price reached before coming to break structure, now that will become the lower high. Now I want us to confirm, I want us to talk about candle body close. Types of structures. Candle body close. Now for a candle body, candlestick, bullish candlestick, price opens lower at this point. This is the opening of the candle. The highest point price reached is this point. The lowest price reached is this point, and where price closed at is at this point. Now this one is what is known as a candle body, and these ones are what are known as the wicks of the candle. Wicks of the candle. For a bearish is the same. For a bearish, market opens with up, open of the candle body, the highest point, the lowest point, and candle body close is at this point. We have three types of structures. We have the swing structure, internal structure, and fractal structure. Let me talk about them. Internal and swing structures. Every trend has two layers. Basically, two layers simultaneously. Understanding both tells you where price is within a trend, not just which way it's going. This is the foundation of knowing when to enter versus when to wait. Swing structure. The major swings visible on higher time frame, basically the daily time frame and higher forward time frame, defines the directional trend direction and trading bias. Never trade against the external structure. Okay. Never trade against it, but that is how you can trade with it. Internal structure, these are minor swings, each leg, every trading opportunities. Minor swings within each leg and pull back within the trend. Then we have something known as the premium and discount. I'm going to show you it. Let me just move on to the next slide. Now, if you look at these this one right here, the white one is a swing structure. The white one is a swing structure. The blue one is an internal structure. Now in the internal, you see that price is forming uptrend, downtrend, uptrend, downtrend. Then price is pulling back. So when price is pulling back, the internal one, you'll notice that it has shifted to bearish. Then once the continuation is playing out, the internal one is has shifted bullish. Okay, so one swing move on the higher time frame, basically daily time frame, one swing move in the daily time frame, on the lower time frame like 1 hour time frame or 15 minutes time frame, you'll find that it's a series of trends. Okay, series of trends. Now this one is the internal structure and this one is the swing structure. So swing, basically seeing the structure is bullish, while For internal, the structure is bearish. Okay. After every break of structure, you usually expect a pullback. Now, for this point, we have the swing low and swing high. While for internal, we have this internal low and internal high. Let me show you them on the charts. Where is it on the charts? Right here. This white one is a swing structure, and this is a swing break of structure. The swing structure is bullish because we have a bullish break of structure right there. While for internal structure, as you can see, internal is this red one or this internal one. Okay, so this one is the internal high and this one is the internal low. Internal structure is bearish because we've had a bearish break of structure. So for internal, we'll call this one internal or IBOS, internal break of structure. While for swing is just known as a swing break of structure. Now, how do we validate them? Because you have to know how to identify the swing highs and swing lows. You have to know how to identify the swing highs and swing lows. And as I have shown you in this one, let's say this one is the daily time frame. The white one is the daily one, while the blue one is like the 1 hour. So for you to know a swing break of structure, you need to wait for a candle body close. Basically, at this point, we need to have the candle body close. Candle need to close above the break of structure. If this one was the previous higher high, this one is the higher low. This one is now the next higher high. This is a swing low, this is a swing high. So this is market structure 001. Minimum of 2 candles. So a valid swing high, you have to wait for a minimum of 2 candles on each side that are lower than the high candles. Okay. Let me show you it on the charts. So for internal, you can see we have the internal structures, internal, internal, internal. So internal, you can see it was in a bearish trend, but this one, let's take this one is the 1 hour time frame. As you can see here, this is the 1 hour. On the 1 hour, you can see we had this bearish trend, but on the daily, you'll just see it as a pullback. Okay. Then when internal shifts bullish, on the daily, you'll see that now this one is the continuation. Okay. On the internal or on the 1 hour, you'll see this one is a bullish. Okay. Now let us continue. Market structure is like a staircase. In an uptrend, each step goes up. Change of character is when a step suddenly goes sideways or backwards, alerting you that the climb may be over. We have different types of price delivery. Our price is delivered, okay? Our price is delivered. Price do not move randomly. Price is not random. It's delivered in an engineered sequence. Number one, you'll find that we have the accumulation stage. Accumulation is where you'll find that institutions build positions quietly within a consolidation range, and price appears to range within no direction. So this is just when price is just ranging. It's accumulating orders. Institutions will say they're building positions quietly within a consolidation range. Price appears to be directionless, and retail traders lose patience. This is where the trap is set. Okay, this is the accumulation point. Accumulation. Accumulation. Then manipulation. Manipulation is or basically expansion. Okay, price rates the previous levels, the previous highs or lows, equal highs or equal lows to trigger stop losses and create order flow. So we had something like this accumulation, price was accumulating. Then what happens? Price expands or manipulates it. Then after it manipulates it, now this is the manipulation. So we had the accumulation, now this one is the manipulation. Retail traders, remember, their stop losses were resting here. They were buying at this point and they were selling at this point. They were buying at this point and they were selling at this point. Then price expands, taking out all the stop losses, sells, sells, taking out all of them. Then after they've been taken out, now we can see the real move, the distribution. After the manipulation, the liquidity raid, price delivered in the intended direction at a speed. This is where we as smart liquidity SLC practitioners profit. Now we wait for that one. We wait for that to move, okay? So we said we begin by the accumulation point. Accumulation, 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 accumulation. Most retail traders are trapped in the accumulation point. After the accumulation, then we see the manipulation. You'll see price comes, takes out the stop losses of, takes out stop losses for the retail traders. Then after they've been taken out, now we have the real move. And when now the real move plays out, the distribution. Okay. So we wait for this one to happen. So basically, this is the AMD. ICT traders call it AMD. Accumulation, manipulation, and distribution. This is basically price delivery. Price first builds up liquidity. Accumulation, we can call it building up of liquidity. Build up. Then manipulation is basically the inducement. Then the distribution. Inducement is where now they are taken out. These guys are taken out and these guys are taken out. Then now distribution. The real move plays out. Okay. We're going to see how it happens on the charts. Okay. So session breakdown. Go to your charts, mark out the higher highs and higher lows. Mark out the higher highs and higher lows on how you've understand the basic market structure. Okay. Number two, mark out the break of structures and change of character on live market as I have shown you. Number three, go and look at where price did the accumulation, manipulation, then distribution. Okay. Number four, go and look at how these internal, how market different time frames aligns. If the daily time frame is in a bullish trend, the internal, we know that in the 4 hours or 1 hour will be in a bullish. Then if we begin a bearish pullback, you know that price will shift in the internal, okay, as we have seen. Common mistakes and misconceptions to avoid: calling a change of character early from the week. So a valid change of character requires a candle close level through the candle close through the level, not just a week. Weeks are just probes and closes in commitments. Number two, confusing internal pullbacks with reversal. A reversal within a trend is not just a reversal within a trend is not just a reversal. Trending counter trend against 4 hours and from a 1 hour dip is the smallest, costliest beginner error. Number three, you need hundreds of level to read structure. Basically, structure analysis requires only swing highs and swing lows. Just know how to mark out the swing highs and swing lows as I have shown you. Complexity is the enemy of clarity. Clean charts means better decisions. Number four, indicator. Using indicator to determine trade. Indicators are lagging. They confirm, they do not lead. Market structure read from raw price action is what comes first. So as I have told you, go and mark out the previous higher highs and higher lows in 5 raw different charts and send them to me on my DM. In Telegram, you'll find me at Trader Mzambezi. In WhatsApp, I'll leave my WhatsApp contact right there. Then mark out a break of structure, change of character. 3, mark them out on GBPUSD. Then map the AMD, the accumulation, manipulation, distribution. Then do a full top-down analysis on daily time frame buyers, 4 hour structure, and 1 hour positions. Describe them, Describe the difference. I believe you understand the difference between a break of structure and a change of character. Label them on the charts, all swing high, swing lows, break of structure and change of character. Identify the AMD model, premium or discount, the current buyers. So I know this has gone for 25 minutes or more. I like to end at that point. So let's meet on the next. Let's get deeper. This is Stradam Zambezi from the War Room Trading Academy. Peace out. I'll end the recording at this point.